We are going straight into the conversation, and today I am joined by Effie from Cytonn Investments, who is the real estate investment analyst from Cytonn. Karibu sana.
Thank you.
Excellent, excellent. Would you give us a brief of what's happening in the real estate scene in Kenya? Perhaps that's the good place to start.
Yes, thank you for that question. What I will say is we are witnessing a series of recovery for the real estate sector based on what we saw in 2021. All of the sectors are picking up. We have residential gaining a lot of, realizing a lot of activities in the residential sector, especially for apartments. For the retail sector, we also witnessed significant growth. That is, and we still hold a positive outlook because a lot of investors, especially the giant retailers, we have the something like Carrefour, Naivas picking up a lot of spaces for the retail aspect. The office also is kind of coming into place because in 2021 we saw the occupancy slightly going up. You know, for 2020, when we realized that there was the pandemic, there was the total lockdown. Most businesses shut down or either adopted the work from home aspect. But in 2021, we realized that yes, there is COVID, we need to live with it. So we are still, businesses are now looking at how they can adjust to living with the pandemic, and that's why we have realized businesses resuming or adopting the hybrid working aspect of commercial office, whereby at times you are at home and at times you are at work. So a lot of activities are picking up for the commercial office sector. Land has continued to be a good investment asset class. Even with the pandemic, we saw it becoming very resilient. It has not recorded declines in performance. However, for the listed real estate sector, that is, we still hold a negative outlook because we look at, for example, the Fahari instrument. From the listing time up to now, the performance continues to, I'd say, depreciate. It was listed at 20 shillings, but as at now it's less than 10 shillings. So it has depreciated with over 60%. That is too high, I would say. And then we have the mixed use and the hospitality sector, which are really picking up in the real estate sector. So overall, I'd say we realized a lot of improved activities in the sector, and we expect this to continue going forward.
Interesting. How is the occupancy rate in the residential and commercial sectors?
I wouldn't have the figures offhand, but I'd say it improved. For commercial office, we realized around 2% of an increase in the occupancy rate. We are ranging at around 70 to 75, which is still very okay, given having in mind that we still have some oversupply in various sectors, in the office, especially the key office nodes like Upper Hill. But overall, I'd say the real estate sector is gaining traction, but we hope this will continue going forward in 2022. However, we still have the elections coming. Sometimes people fear the outcomes of the election, but if everything goes well, because I'm seeing the kind of atmosphere that we had previously, for example, in 2017 is not the same that we have. We already have the pandemic to deal with, so people are not getting the election aspect of it. So we are focused on recovery, and that's why there's still hope for the real estate markets despite the elections.
Yeah. I was just looking at some of the figures that are running on the screen, the real estate GDP prices. We've gotten to, over 900 billion Kenya shillings in the sector. I think that's quite a performance from the sector. Okay, fair enough. Today I wanted us to have a conversation around financing. How do the big boys like Cytonn Investment finance their real estate projects?
There are various strategies that real estate developers choose to invest or finance their projects. Number one, we have debt, which is usually the most common way of financing real estate projects. And then we have...
When you say debt, you mean someone just walks into a bank and says, I want some 20 billion to do a project in Two Rivers.
Yes, something like that.
And banks give 20 billion?
As long as you have the collateral and you have a good payment plan, this is what exactly you want to achieve. They will finance you, but I don't think it will. The banks will give full amount or the full debt, but you have to show something. You have to show the vision. You have to show the necessary approvals and have a collateral for the debt.
Yeah.
And then we have the other way of financing is through equity. Equity financing. So this usually happens in joint ventures where you agree with a partner that I'll give you a certain stake. You agree, for example, I bring in my capital and we might be having the landowner also bringing in his or her capital in form of land. So the developer will come in and the landowner to now develop the project. So there is always the equity aspect of real estate financing. And then...
Before we move to the next one, if I have a land of 100 acres, for example, and you have money, and we do the project, does it mean then that the value of my land will form my capital holding, or does it mean that it's a 50-50 arrangement?
So what happens with joint ventures, let's say as the developer, you have the amount or funds to develop the project, but most of the time you'll realize the landowner does not have funds. So at the start of the JVs, it's a 50-50 type of situation whereby you give in your contribution as land, I'll give my contribution as money. But most of the time you'll realize that developments usually have let's say the cost of developing is usually more than the cost of land. So there is the dilution aspect bit of it, because you'd realize by the end of the project, the landowner's contribution will be around 80, the developer's contribution will be around 20%, with the developer's contribution being 80%. So there is the dilution aspect. But once you've realized the profits, you will first, the joint venture partners will agree on how to exit the project, which in most times you sell the units if it's a residential, or you generate the income you get, you divide depending on now how the stake is. So if the landowner has 20% of it, they'll get 20% as the income, while the developer gets the 80%. It all depends with how the project folds as it progresses.
Okay. We've learned about debt and equity financing. Any other?
Yes. We have project notes. And so for project notes, these are generally special purpose vehicles that real estate developers come up with. It's I'd say quote unquote more of debt financing, but this one, it's unique to real estate because in this case the developer gets funds from directly from investors and they put in the funds to their project. That is the model that we as Cytonn are using. And then we have the rates now, that the not listed but real estate investments trust, whereby you form a trust and then you invest in the trust through either income generating aspect of it. We call it the I rate, and then we have the D rate, which is the development real estate trust that usually focuses on now the development bit of real estate, and it can be converted to an income earning real estate investment trust once it's completed.
Project notes is just debt financing. That is a gist name of calling debt financing. In my mind, actually, I wanted to say this debt financing ambayo imeomoka. Yes?
I wouldn't say that, because in this case, for project notes, you're pulling in investors who will give you funds.
Numerous investors.
Yes.
So you break it down into small units, just the way we do at the stock market.
Yes.
And then now you sell it to the likes of Ramogi.
Yes, I'd say that.
Interesting. Is there a possibility that you would have real estate investment trusts that are not listed at the market?
Yes, there's a possibility of having rates that are not listed. Actually, we only have one that is listed. That is the Fahari I rate. And we have the Econ rates, which is trading in the stock market. That is the unquoted securities Nairobi Stock Exchange. But it's trading with, and it's not listed currently, but it's trading in the NSE. So there's possibility of having that and running smoothly. Even before that, it was just running without trading openly in NSE.
Are there rates like that, and how can I perhaps access?
Yes, they are, but you see, for the Kenyan market, I'd say we still have an undeveloped rate market. The market is not fully developed. There's still low investor knowledge for the real estate investments trust. And then just since it's a new concept, there's need for pushing in developers to understand what this concept is. So before being able to run this concept without it being listed usually takes a lot of time. You have to drive the investor confidence bit of rates before I'd say listing.
Yeah. Okay. Would you say then, of course you've somehow answered this question, but let me just ask it because it was already in my mind. Has the introduction of rates at the stock market, has it improved liquidity for real estate development or for real estate developers like yourself?
Rates are I'd say these are just alternative. It's an alternative way of financing real estate. So definitely it has improved liquidity, because as an investor, you're looking at a situation whereby you're getting funds through a trust.
Yeah.
So you're able to pull in investors into your trust to get funds.
Yeah.
For example, we have Econ, who have made major strides in the rates market, because they have financed most of their projects primarily through their D rate, the Econ D rate, which is really working on for them very well. I'd say it has helped them improve their liquidity, because having access to cash that will help you complete developments. We are seeing some of their developments really taking shape. The Kwetu and the Kejani units, student housing projects taking shape. So it's, I'd just say it's an effective way of that real estate investors can use to raise funds, although it still has its own challenges.
What are these challenges? I mean, but I also wanted to hear, has it also improved liquidity for small-time investors like me, who wants to come in with, let's say, 10,000, 20,000, as opposed to 10 billion, 20 billion?
So that's the main challenge I'm talking about. Since the rates market in Kenya still is underdeveloped, so there is still the challenge of investors coming into the trust. The minimum requirement for an investor currently is at 5 million. Looking at it from a layman's perspective, the middle income rate currently is at around 50,000. That is the salary that an individual earns through the month, which is very low compared to the 5 million that
it's
is
1% of the 5 million.
Yeah, so it's still a challenge, and that's why we see our rates market, it's still not developed. You'd say it's still underdeveloped.
You would favor a market that at least considers the small player and opens it up?
Yes, there's need for a lot of reforms to be done, especially in the rates market. There's need to reduce that cap to at least some level which an investor can manage. It's and an average individual earns around 50,000 Kenya shillings, but Even up to, let's say, 100,000 is enough for an individual to make an effort to enter or invest into a real estate investment trust. So there's still need for a lot of reforms to be made for this instrument to gain the traction and popularity that would, I'd say, required.
I need to go for a break, but before that, I don't want you to break my heart very quickly and so very easily. What happens then to small players, say like myself, who have like 10, 20,000 every month, and they are keen on investing in the real estate market? What is our option now that we can't go rates and we can't go Cytonn, maybe?
I didn't say you can't go through the Cytonn way, but also the rates. The challenge is the minimum requirement for the investor. This is too high for the, I'd say, the local mwananchi. But other companies, now let's bring Cytonn into place, have these investment arms or channels whereby you can invest into real estate depending on the amount you have. So you can also, there are other products, not only real estate, where you can invest into, let me say, into the capital markets. We have something like the money market funds, which usually run very well. So if you find yourself tied towards not investing in real estate, there are still other avenues for investment as an individual.
Absolutely. But I'm keen on real estate because you said it's doing very well, and someone might want to, quote unquote, diversify the investment, and they want to ensure that they have real estate in the portfolio. There has always been this narrative that if I went to the village shopping center and I bought a piece of land with my 10,000, 20,000, and I paid it in a year, and then built those 2 shops with 3 doors, I stand a better chance at getting good returns as opposed to buying into the stock market.
There is a possibility, but you see, for most real estate investments, you are targeting the high net worth individuals. There are other ways of getting into real estate for the small investors, which now rates could be a better option, but it's locked out for that category of investors. But now we have the alternative. I'd just say the stock markets, money market funds, still are the best channels for investing.
You're still taking me away from real estate.
Yes.
You have refused to answer the fact that I can actually invest in the village, no?
You can, but you see, for an investor, can
it give me good returns?
Real estate?
In the village?
I'd just say you need to have a strategy, first of all.
Okay.
You need to develop a good financial plan to make sure that you'll get the required returns you have. What I usually say, before an investor chooses to get into any program or investment channel, he or she needs to look at what he or she will get in the next 5 years. You need to get a good financial advisor or a financial institution to give you that guideline of where you'd want to be or what you expect from this return. So I don't want to say exactly that it's not good, but you need to get the best advice to enter into the investment.
Effie, I am trying to establish this thing, yeah? Mm-hmm. There are viewers that do not have 5 million. Mm-hmm. There are also viewers that are not keen on working with, quote-unquote, other real estate companies. But they are a teacher in Bomet. Mm-hmm. You understand? They have some savings. They are keen on diversifying the investment portfolio into real estate. Mm-hmm. How do we help this class of investors? And that's what I'm trying to establish. Is there alternative avenues for them to invest out of the spectrum that you've described as high net worth?
The alternative would be for you to now get the financial plan right. I'll still insist on that. And then check how the market is performing. Residential sector will still give the best returns for real estate. So, and then you also need to check the type of residential developments that you as an investor would want to develop. See, I'm getting into, most of the real estate investors usually focus on a concept that will drive individuals into investing into those, I'd say, projects. So you need to have the best focus, or say, you need to have the best strategy before getting into real estate.
You need to have the best strategy before getting into real estate, and make sure you have a financial plan.